Hello, and thank you for watching the watch list. I'm Isaac Kamau, an investment associate at NABO.
And my name is Rolly Kimoy, an investment analyst at NABO, and we're glad that you found time to join us.
Yeah.
Yes, so I think we'll kick off with Argentina. This weekend was an interesting one for the global investor space,
Yes.
and it was clear that the political risk, the political situation in a country, and how investors perceive of it is very critical for how the index and the currency for the country ends up performing. Well, we saw the index down by about 38% in a single day, and the peso down as well, depreciating against the dollar by about 17%. And this was mainly on the back of the current president, Mauricio Macri, losing the primary polls over the weekend. And, you know, he seems to be the one who investors favor as the one who will, you know, bring forth the reforms in the country that would be beneficial for the economy. So when we saw him now losing the primary polls against the candidate called Alberto Fernandez, then, you know, investors are now doubting whether he will really win the election scheduled for October this year. So it's a wait and see approach, but certainly sad for emerging markets.
I think, like you said, it all comes down to how the investors view the trajectory of that particular economy, particularly in the case of a country such as this, where you're going from a place where it's sort of not so efficiently run, and you're trying to institute some reforms to try and take it to sort of a better place, right? And of course, these reforms have to have, you know, the buy-in of the people running the country, right? Who, for the most part, are the elected representatives. So whenever there's that lack of alignment or a sign of a lack of alignment between what the appropriate reforms are and what's likely to actually take place, then you have that loss of investor sentiment. And I think we see it in quite spectacular fashion with this particular case. That was I think I saw it on Bloomberg, the second largest single day loss for any stock market ever. Right?
Wow.
The second. So it's
something.
It's really amazing to see how quickly that sentiment can turn. It all goes back to the reforms. Sort of bring it back to Africa. We can think of some of these countries which are under some sort of reform program, right? With the IMF or maybe something that they're just trying to do internally themselves, and the potential for elections to disrupt that. We have quite a few elections
coming up in 2019 and 2020.
Yes. I think the most immediate one I can think of is Tunisia. They're having their elections later this year, parliamentary and presidential in September and October. There's a few others next year: Tanzania, Ghana, and the Ivory Coast, which are also keen to watch.
Mozambique is also this year.
So Mozambique is also this year. It's good that you bring that up, because that's a country that's also in the process of undergoing some sort of reforms, and it's really critical to just watch exactly how those will play out, and the potential for, you know, for the reforms to be derailed, or not even for that actual change to happen, but for the investor community to expect that change, because again, markets are forward looking. So it really depends on how the investor community views these various developments.
I think that sums up Argentina pretty nicely. We can move on to Congo.
Yes. I think Congo, some interesting developments over the weekend. There's been a new oil field that's been discovered in the central part of the country. So this is it's the largest find in the country's history. Potential to generate 980,000 barrels of oil per day, which really will take them to a totally different league in terms of oil production, because currently they're doing 350,000 per day.
Yeah.
So this new
Discovery,
field is likely to just they are the fifth largest producer in Africa.
Currently.
Yes, currently they are. This will take them to third on that list, behind Nigeria and Angola. Nigeria doing about 2 million per day. Angola doing about 1.8 million barrels per day. So Congo is likely to come in at 1.3. Now this the economy is already somewhat dependent on oil, and this will help the growth of that sector even more, which will have a very big ripple effect in the general economy of the country.
The other interesting development is certainly gold, with the increased sentiment globally from Hong Kong. We see clashes, and the chief executive of the Hong Kong CLAM now coming out and saying that the current situation would potentially negatively impact the economy of the is it a city, country? So you know that increase in, because certainly Hong Kong is usually a key market for investors.
It's a gateway to that region.
To that region, right? Yeah. So if growth is expected to be negative, then it increases generally the risk sentiment in the world.
And
so
this is on top of the trade tensions.
Trade tensions as well.
Sort of increasing the level of risk in the global economy.
And then the other thing, we're seeing a decreased level of yields. Monetary policy easing, being the sentiment all the way from the US to Europe and most of these other countries. Last week we saw Thailand, we saw Philippines cutting down on their rates, and then those Asian countries really speaking on them furthering down the cuts, furthering the cuts down the line. So when you see that, the next best thing for you to invest in is certainly gold.
The sort of cost of not holding cash is much lower. Previously, you'd make a yield of 2% on cash. Now you're making only 1%. Then that trade-off becomes, less skewed towards cash and more skewed towards real assets. And that's, I think, part of what has contributed to that upward surge in gold prices.
Because certainly, if I can read for you some of the figures, you can see. Year to date, the gold is up about 19%. Q1 it was up 1%, Q2 up 9%, and now Q3 only hardly 1 month, 1 month and maybe about 2 weeks, we're seeing it doing about 8%. So and if the sentiment continues with this trajectory, then this commodity will potentially record higher levels further down the line. And it seems to be the thesis for metals. Metal seems to be doing pretty well, being led by nickel at about year-to-date performance about 46%, iron ore on the other side about 36%, while agricultural commodities seem not to be, most the key ones are actually on the negative. And of course, some of them have been impacted by the dispute between the US and China, like soybeans. Soybeans is down about 2%. 2%, while the worst performing is live cattle, about negative 16%. I think we'll continue covering this, and maybe we'll even paint more color as we go on. But there seems to be a trend that metals are doing well, oil is also doing pretty well, while agricultural products are not doing quite well. And then maybe we can finalize on Egypt.
Egypt received the final tranche of the IMF program recently, and that's sort of helped their reserve position in terms of foreign currency reserves. I think this is one of the countries that we've seen sort of positive signs for much of the year, with very little negative sentiment on it. So this further adds to the to the positive sentiment
Yeah.
around it.
Yeah.
Especially having such a strong reserve position will really help them service their foreign currency debt, which is quite it's a significant amount.
Quite positive. And I think still on the back of reforms, we were talking about Argentina, and then we were talking about some of these countries that we're expecting. Other than Argentina being an example, I think Egypt is also a good example of a country that has really done pretty well. But still, I know 44, 45, 46 billion dollars. It seems like a very huge figure when we mention it. But if you look at the global reserves and you sum it up, it adds up to about 10.9 trillion. And of course, reserves held in the US dollar is significantly outperforms all the other currencies. With the euro following closely. So if you try to check, if you do the math, $44 billion and 10.9 trillion. $44 billion is quite huge. Egypt is the second after South Africa in terms of second, like in terms of reserves. If you compare South African reserves and the Egyptian reserves, Egypt comes second to South Africa. But that still is less than 1% of the global level of reserves. I think that's it. Thank you so much for joining us. We look forward for you to join us next week. Thank you.
Thank you.